Following some positive information last night from the Bank of Japan and a positive release for stocks this morning, cryptocurrency has responded by completely downsiding to the bottom of the current range. And here we see ourselves. Are we about to slip down past support and put an end to this beautiful Bitcoin rally? Find out today on Breaking Bitcoin. Welcome back to Breaking Bitcoin, everybody. Hopefully you're having a fantastic, beautiful day. Today is Wednesday, of course, January 18th, 2023. Say that 5 times real fast. Foul year of our Lord here in the Breaking Bitcoin above ground bunker because we are out of COVID. Things are good. Markets are good. The market has given us lots of volatility over the last few days as we've just been range trading, giving us light for good range trading opportunities. In today's episode, we're going to break down what the profitable strategies have been for our team over this past few days and what we are looking for as we go to break out of this range and exactly what actions you should take. I'm also going to break down one of my favorite beginner mechanical strategies, Ichimoku. I'm going to show how the Ichimoku trending strategy could have successfully caught the recent movement up in Bitcoin, how I would have traded that, were I using the Ichimoku Cloud strategy myself. We're also going to talk about the release of the information that Genesis, owned by Digital Currency Group, is planning to file bankruptcy this week. However, breaking brand new information on that's looking like they might be doing some restructuring or bankruptcy provisioning. So we'll be talking about that, what its implications might have on the broader cryptocurrency markets, and the best ways to make money in a bull market. As always, before we begin, if you enjoy the content, the like button is right down there, right next to the subscribe button. Let's get cracking, guys. Into the split screen, let me just do a quick resize my Stream Deck, which was working real beautifully there for like 2 days. I would just hit the button and my screen would resize exactly how I wanted it on different screens. Is now not doing exactly what I want it to do. So anyways, we're just going to move on with that. Let's just look at the current market. Let's break down what we've seen today. This morning was pretty interesting, obviously, as the market opened up at about 7 o'clock my time. So that's 8:30 my time. 7:30 my time is when the stock market bell rings. So always interesting volatility, generally around 7 and generally toward the afternoon, a little bit after what we've seen right now. So we kind of see that characterized here. Interesting attempt to run up. And this, I just got done with a fantastic mentoring session. Every single week, I meet with all of our premium subscribers who are in the trading and investment group to do a sit rep of where we're at with our trading, what opportunities our members are seeing in the market, how they're doing with their trading, and the best ways that I can help them out with their trading strategies. So we had just a fantastic opportunity to talk about what breakouts look like, when should we be range trading, what strategies can we use to range trade, what are the best ways to minimize risk given that environment, and what are the big telltale signs that we want to look for to tell us what the next potential move is going to be. So let's break down how we've gotten to this point so far. Obviously, big picture, weekly time frame, we are in the midst of a large bearish trend. Let's throw on our trending indicators. We have been in a confirmed bear market ever since price lost both the 21 weekly exponential moving average as well as the Tenkan-san leading line back in November of 2021. And we have experienced a market regime of lower lows and lower highs ever since then, culminating with the collapse of FTX back on November of 2022. And throughout the remainder of November and December and up into early January, we were simply consolidating the entire down here around the price point of $16,000 to $17,000. Last week brought a beautiful explosive movement, a 22% movement to the upside here as measured on the Bitstamp chart. And as we have trudged through the rest of this now week, we are about halfway through the week now, ladies and gentlemen, and we have been unable to make any significant progress forward. The bulls have been unable to push price higher. However, also telling, the bears have been unable as of yet to swat price down. So there we are in the midst of a fierce battle. This is a hot spot in the market. Bulls want to push higher, bears want to push lower. And so for us as emotionless robotic trading machines, we need to take no part in either side. We need to wait for confirmation and go in whichever direction we think is going to be dominant or appears to be dominant based on the objective evidence. The objective evidence is which way is the market moving. We generally want to trade in that direction. With the caveat that range trading strategies, you don't want to be trading the opposite way. So we're going to talk about that. Yesterday, I was talking about, coming back down to the daily, we can see this. We are starting to see our first signs of significant selling here on the daily though. Where are our logical pullback signs if this bullish trend is going to resume? A nice healthy retrace of this breakout movement might pull us back down here to the 200 daily simple moving average around 19,600 or possibly to the top of the Kumo cloud around 19,150. So a nice little zone right here, which would be an attractive pullback buy and a good opportunity to see exactly how price is going to react. Do we get high volume at that area? Do we get low volume, which is what I would like to see? I would like to see diminishing volume on pullbacks here and increased volume on buy ups is what I would like to see now if we are going to continue this bullish trend. What I do not want to see is high volume approaching the 200 simple moving average, high volume approaching the Ichimoku cloud. That is going to make me want to add to shorts. Quick position update. Of course, I am long on the weekly time frame. We secured positions about a month ago in the $16,000, $17,000 price range, targeting that regular bullish divergence that we identified on the weekly time frame. Doesn't matter, pick a momentum oscillator. You would have seen regular bullish divergence, relative strength index, stochastic, MACD, wave trend oscillator, which is what I'm using, PPO Laguerre. Doesn't matter. Every single momentum oscillator, every oscillator out there was calling for regular bullish divergence, and we had the cojones to take it. Concluded a successful daily trending trade right here around this range, opened up on the 7th, closed out about the 13th. Had a couple of losing shorts along the way as well. However, the P&L has definitely balanced up to the upside. And then break down where am I at right now. As you guys know, I've been short since the top of this range, which I posted about 2 days ago now. Held that short for 2 days, and now we are in nice profits on that. Ultimate price target on that is that 19,938. Okay. So we have been in a pretty volatile range. Two easy ways to identify ranges and when you might want to be shifting your trending strategy to a potential reversal strategy is when you see one of two things: big candle bodies that appear at the top or bottoms of movements. So again, this is something that I pointed out in the class earlier in our mentoring session. But if we look at all these hourly big greenies here, they're all breakout candles, and they are not blow off top candles. This is not a blow off top candle. Why? Because there's no wick. This is not a blow off top candle. Why? Because there's no wick. This is not a blow off top candle. It is a breakout candle. These are all pretty much breakout candles. The one that I have circled here is like kind of an in between, but it's not a very strong blow off top candle. There's not a significant shorting opportunity following that unless you position yourself perfectly right here, but very small margin. And this is the first significant candle in which we see there being, following it, lots of opportunities for profitable shorts. Now, why is this candle qualitatively different than all these others? Well, two reasons. It occurs at the end of consecutive green candles. There have been consecutive green candles that have already broken out of a previously established range. Here we have a previously established range. Price is moving up. We have the breakout candle right here. Strong green high volume candle with very little wick, breaking above a previously established high. That is how we confirm a breakout. And then we have this nice subsequent advance of continuously growing candles and large wick, high volume, successive candles, big candle body, high wick. That is a candle to watch out for. Typically an indication, this is a candle where you want to pay attention because this is a candle that is indicating, hey, the trend might be bending, or that we have temporary exhaustion. You're never going to be able to 100% accurately predict these things, but those are the metrics that you want to watch for. You want to watch for a big explosive candle that occurs at the top of a currently existing movement that seems to culminate or climax that movement. This movement will almost always occur on a very large, usually 2 to 3 times above normal, average than volume, above average. And there will often be a large wick that accompanies it. Okay. You can get all of those things in the same bar, which we seem to get on this bar. Your probability of success tends to increase exponentially. And how do we know a range is going to be established? Well, we don't know, but we can guess when we see confluent factors like following that movement. We're looking for a similar movement to the downside. And this is what we see here. We see a large candle body. Not really at the end of a successive move. You could consider this one though. So we have if we go on the 15-minute time frame, we can see that this is a pretty successive move of 15-minute candles. And I know that's kind of reading into it, but hey, just doing my best with the chart. The chart's never going to be perfect. You have to interpret them the best that you can. And so we have a high volume move after an uptrend that seems to culminate the uptrend. We have a high volume up candle with a large wick, large candle body that seems to climax an uptrend. Immediately following that, we don't make any additional forward progress. We stop in our tracks and turn back around. It's not always going to be as neat and clean as just one bar down and that establishes the range. Sometimes it's going to take a lot longer and then a drip down and that establishes the bottom, but we have that here. We have the bottom of the range established, very similar, high volume move, large wick, hammer candle, even a reversal candlestick pattern there. And then as you see, as we make our next run on that previously established high, we don't close above it. Let me show you guys what a very convincing breakout candle looks like. Here is a range. Here is a very convincing breakout candle. High volume, large green candle body, very little wick, closing very strongly, proudly, and confidently above that range. Price follows. Here's another one. Breakout candle. I mean, a breakout candle is one that when you look at it, it is common sense that, wow, that candle just spanked that range. That range is no more. This candle decimated that range. That range has been broken out of. That's the mindset you need to adopt. Those are the things you need to look for. Here we have another established range. We've got multiple breakout candles. We've got one here. We've got one here. And this one, if you were not paying attention to the others. So very strong, convincing, powerful breakout candles that indicate that the strength is to the upside. We want to trade in that direction. That's what we're looking for. Let's draw our lines of support and resistance again. This is not a breakout candle. This is a scam wick. So as you can see, we trade directly above that previous high. We grab liquidity and price immediately reverses down. That is the behavior that you want to anticipate and take trades in line with in these situations where you believe after you see something like a blow off top and then a bottom be established, your next run on the high, you almost always want to short. Unless you see a convincing big breakout candle, then you trade long. This is often where I'll go down to the 15-minute time frame and start scalping something like the RSI or any momentum oscillator, really. So again, here we have a close above that line. Justin, doth this not be a breakout? No. This is a baby bitch candle, right? Pardon my French. This is nothing. Yes, we close above the high, but on what strength? This is not a breakout candle. This is barely peeking its head above that level. We want a strong, convincing breakout candle that very clearly and authoritatively breaks the range. If you don't see that, fade the breakout. If you don't see a convincing breakout, fade the breakout. Here and here. All right. So our resolution to stay short has paid handsomely. We're in decent profits on these hourly shorts right now. I will add to my position again on a convincing break of this previously established low. Until I see that, I'm still in the mind to be looking for longs. See, we're going out of the 15-minute time frame. We have a deviation outside of the Bollinger Bands. Likely we have, no oversold conditions, but we do have our two other reversal indicators indicating oversold conditions outside of the Bollinger Bands, and that's a nice scalp back up to the mean. Pretty classic mean reversion strategy in a range. They tend to be very profitable. You just need to know when to break them off, and you break them off when you have a convincing break of the consolidation range. Until then, you fade all breakouts. So I will continue to do that. Fade breakouts in this range. As price gets low here, I will look to take it back up. And if as price gets back up here, I'll take shorts. And when I see a convincing breakout candle in either direction, I will trade in that direction. All right, let's take a quick break here. Scroll over to the chat, see how everybody's doing. I want to give a big shout out to everybody watching on today's live stream. If you are here, it indicates that you actually care about improving your ability to trade, that you care about what's going on with cryptocurrency, that this is more than a hobby to you, and that you're actually interested in improving your situation, improving your trading ability. And there's no better place to do this. I am happy to be along to help in whatever way I can. As always, any questions, comments, concerns, sarcastic remarks, death threats, feel free to put them in the chat. Well, death threats will get censored by the YouTube mods, but feel free to pop them in there and I will respond to you as best as I can if it is within my knowledge or wheelhouse. Shout outs to Evo. Cheers, mate. Crypto Rick, good to see you in here. S&P last 2 daily candles not looking too good. Yeah, you know, we had positive news last night from the Bank of Japan. Positive print this morning. And the market responded in the completely opposite direction, indicating it's some pretty fundamental weakness. Damian Hughes, SP rejecting from everyone's trend line, right? Evo indicating that some say the takedown of the Bits Lotto exchange is causing the dump. Yes, so the Bits Lotto exchange has been accused of laundering over $700 million connected to Russian something. If it's Russian, it's bad. That's what the media tells us. If it's Russian, it's got to be bad. So money laundering, and their founder, I believe, has been arrested or indicted. Crypto Rick pointing out the confluence between everyone's trend line and the 200 exponential moving averages. Rick Law says BlockFi stole all of my assets. I'm sorry, man. I am sorry to hear that. But let me tell you something. I don't know if you're still watching. I hope you are. There were a lot of unfortunate victims caught up in 2022 in, let's call it, the Lehman Brothers Ponzi scheme of cryptocurrency, which was all built on this concept of getting people to deposit their cryptocurrency into yield-bearing assets in a custodial fashion. And what history has shown us is that that model simply doesn't work long-term. It is scammy to its core. It is fundamentally flawed. Cryptocurrency is about self-custody. It's about verification, not trust. It's about proof. It's about empowerment. It's about owning the assets digitally, being able to secure your information online, secure your financial wealth online. And it is very easy and tempting to fall into the yield-bearing trap because it's easy money. But that yield has to come from somewhere. And in a bull market, that yield is very easy to come by because it's a Ponzi scheme. It's coming in from new investors. New investors are bidding the market up, increasing the net asset value of the portfolio of the lending company, and that interest is very easily able to be paid out. But when everything crunches, gets tightened, and there's a liquidity crunch, well, all of a sudden, it's like if your income started coming in. Well, that debt's just going to keep piling up. Creditors aren't going away. So I'm sorry that happened to you. It's happened to many individuals in the cryptocurrency space, and it's happened to me. I've got a video on here, how to find 100x altcoins, get in before the herd. And I have had a lot of success finding early alt gem projects and getting in before the herd and doing well on those positions. But I've been rug pulled dozens of times. And that comes with the territory. So I'm sorry that happened to you. Just stay around, keep your head in the game. Happens to us all. Alex81SG, good evening to you as well, family. Robert Taylor says only death threats for Supo, man. Alexander Pearson nailed the short. Yes, I am really glad that we were in line with where we thought the market was heading. Beautiful entry at 21,300. Those of you guys who don't know, Alexander Pearson, one of the coldest, meanest cryptocurrency traders I've ever met. Man is as sharp as attack. Come check out his work in our Discord. Robert Taylor's got a 1590 short on Ethereum. Let's go. John C. asks, what is the platform, brokers, or stock? I do the majority of my trading on Bybit, and I am currently checking in Kraken, and I am currently looking into beginning to trade a little bit sizably on Pionex, as I am currently under the opinion that that will give me access to Binance liquidity. 700 milli, not that bad, says Cryptonomics. Alex81 says, earnings season has started. Q1 is going to be rough. Bryce Stores, excuse me. Nancy Pelosi sold over $8 million worth of shares on the 13th. You know what that means. Chick is the coldest trader, man. Alex pointing out that the reason price dropped was not because of Bits Lotto. We were just at resistance. Let's just say that greased the wheels. Cryptonomics says, if you know anything about crypto, you don't put it on an exchange, you buy it and then move it off the exchange. Bingo. Self-custody. Rick Law now has a cold wallet. I can't believe. Hey, man, you're not a dimwit. It really, literally, it just comes with the space. Like, you know, if you want to go into a field, if you want to become a programmer, let's say, and you go to school for computer science and you start scripting JavaScript, like eventually, you know, in the beginning, you're going to write a bunch of crappy code. And it's only through practice and experience and falling on your face a bunch. You know, if you want to learn how to do muscle ups, right? Like you're going to not be able to do that for a long time. And then one day you can. And you're like, oh my God, look at me. I'm amazing now. So good without a shirt on. Crypto Rick saying CZ was talking the other day about more people will lose their crypto offline than on exchange. Yeah, listen. So this is right in line with something I've said before. So let's you guys may or may not know this. But I have used LastPass for years, and recently LastPass was significantly breached, and even Norton LifeLock got breached the other day. So in the interest of self-custody, I'm always looking for ways to improve my skill set and improve as a human being. Over the last month, I have made it my passion project to understand Bitwarden and understand how to self-host their software. Luckily, they just launched a brand new lightweight, officially supported client called Unified, and there's really no good guides or videos out there about how to set up Unified. All of the information out there kind of assumes that you're a cybersecurity, that you understand a lot about servers and cybersecurity and all that stuff. What if you don't know anything? Like I kind of didn't know that much. So I asked myself, could I set up a secure self-hosted instance of Bitwarden? And the answer was yes. It took some work. I'm glad I got a lot of nerd friends. They really helped me out. But I compiled everything that I did into an easy to follow tutorial. This is our first free course on our website. So if you guys go to krakencryptocurrency.com, go over to Academy in the navigation bar, you guys can access our Bitwarden Unified tutorial. This thing is very intensive, very in-depth, but very easy to follow. I have all the command lines, or all the commands that you can simply copy and paste into your command line interface. And I literally walk through everything from setting up your first virtual private server to registering your first domain, securing your server, making all the necessary install files, learning how to send encrypted emails via SMTP, Docker, Bitwarden configuration and installation, and best practices on how to keep yourself safe. Because the era of because like it's not over, but you have to kind of pick a side in the decentralization centralization battle. So how that relates to CZ's comment. First off, yes, it is going the self-hosted route might not be as secure, because let's think about this. If you use LastPass as your password management company and you use their software, they, as a large company, employ a team of engineers, software developers, system architects to ensure that there is to restrict unauthorized access to their server, their cloud, and your personal information. Do you really think you're going to be able to secure a server better than an entire team of engineers? I don't think so. I highly doubt it. Now, you take a lot of risk when you do the self-hosted route. But here's the thing. You don't just gain risk, you gain power. And this is no more clear than everything that we've seen over the last month or two, ever since the fallout of FTX. You had your money on FTX? Yeah. 99% of the time, you were safer than me running around with my MetaMask. Oh, I typed a 0 in wrong. Boop, my money's gone. Stupid me. But at the end of the day, I am in complete control of my funds at all times. And it's up to me. And it's on me. So I rise or fall by my competence, my skill, and how hard I push myself and how lazy I want to be. Whereas I could have had my funds on FTX, done everything right, and I'm screwed. Because at the end of the day, I was not the one in control. I don't know about you guys, but I like being in control of the decisions that affect my life, my financial future, and my family. And what affects me affects my family. So yes, you gain risk, but you gain power. And power is not easy to come by. But anything worth having is worth struggling and fighting hard for. Now, why else might CZ say that more people would lose their funds? He might be right. Again, he might be right. But let's not forget that CZ has a bit of a self-interest here, right? Like, he runs the world's largest centralized exchange. Like, CZ is not going to come out and be like, yeah, Binance is terrible. I'm not going to come out and tell you that cracking cryptocurrency is terrible, right? Like, you always have to look at cui bono, right? Who benefits? Andrew Munns got screwed for about 12 grand. That's like your daily profit, right? From the Forex markets. Big baller. Shout outs to Mr. Ether Robert Warner. Rick Law 101 says there are proceedings with their bankruptcy. Not sure if I'll get any of the funds off. It could take years. Yeah, it certainly could. Yeah, that's the crappy thing about civil law. It can really be dragged out forever. Shout outs to Starman Drac down there in the Aussies. Andrew got himself a Ledger X. Yeah, I use a Ledger Nano X. Highly recommended. Cryptonomics has got a keep key. Oh, he says Ledger suck. Oh, it's going down. CZ is the last person to take custody advice from. He is wanting you to leave it on his exchange. Yeah, Cryptonomics. I'd never put my crypto information on a password manager, only unimportant stuff and login info. Yeah. So even if you are using, it doesn't matter what password manager you use, there are a couple things that never go into the cloud. And this is cryptocurrency seed phrases. Cryptocurrency seed phrases and private keys never go into the cloud. There's only one place the cryptocurrency private keys and seed phrases go. And it's on a Post-it. And then you get some packaging tape. And that's called poor man's laminate. And you laminate that baby up with the packaging tape. And then you stick it on your desk. Right? Well, Justin, what if someone steals it off my desk? If you are worried about people stealing things out of your personal space in your own home, you have bigger problems than the cryptocurrency markets right now. And you need to back it on up and focus on, first and foremost, your physical surroundings and get yourself in a better place. Damn, Rick's got his 24-word seed phrase memorized. Cryptonomics says, can you summarize the self-hosted thing again? What is that? I'm familiar with VBs. Yeah, so long story short, Bitwarden is a software alternative to LastPass. So they're a company. They have a cloud-based hosting solution for you. So with LastPass or Dashlane or KeyXC or any of these other ones, Norton LifeLock had one. There's all kinds of different password managers. You have a web vault, you have a mobile app, you have a browser extension. Bitwarden has all that. The difference between LastPass and Bitwarden is that LastPass, Dashlane, KeyXC, they're all proprietary, meaning that they have proprietary encryption algorithms. Like their code is in a black box. Bitwarden is open source, just like Bitcoin. So it's publicly audited and everybody can see and be like, oh yeah, that's a tough nut to crack. So you can go to Bitwarden, you can use their software for free, their browser extension, mobile app, web vault, all for free. If you want to pay $10 a year, you get all the premium features like two-factor authentication, Bitwarden TOTP, time-based one-time passwords. So an alternative to Google Authenticator. Great software. But since it's open source, Bitwarden uniquely allows you to run their software on your own server. So not in their cloud. So the reason why everybody who used LastPass's data is now out there is because LastPass keeps all of their customers' information on their cloud server. So that very large cloud server is a huge honeypot, a huge attack vector, because attackers know that if they can just get in there, it's really hard to get in there, but if they can, they're going to get so much, everybody's data. Whereas if you run your password manager on your own server, which a server is just a computer, there's no such thing as the internet flying around in the space. Everything that you access on the internet, it exists in a physical computer somewhere on Earth. So all people, like, this was my biggest misconception about computer science before I understood. Like, people think server, cloud, there's nothing up in the sky. No, there's only physical computers. That's all that exists. When people say cloud, they just mean easily accessible physical computers somewhere else. Oh, we'll keep that in the cloud. Oh, you mean on someone else's computer? Oh, okay. I see what you mean. That's all the cloud is. The cloud is someone else's computer. So anyways, so you can spin up your own server, and that could be a physical computer in your house. It could be a Raspberry Pi, or it could be a virtual private server that you spin up through a company. I use Linode. And then you can install the Bitwarden software and access it just like you would access Bitwarden. Cold wallet is the best way. 12 grand's rookie numbers, man. You got to pump those scam losses up. Oh, boy. You guys are the best. Yeah, so a virtual machine is okay. So when you have a computer, you have a drive, either a hard drive, it's what we call them, a hard drive. Back in the day, HDD, physical hard drive, SDD, solid state drive, and you have to basically make a partition, which is like, let's say you have a terabyte of data. Well, we're going to partition like this much, and we're going to install Windows on that partition. So usually most computers, you install the operating system on the whole partition, and everything that runs on that operating system runs across the whole partition. So whether the partition is the whole drive or a segment of the drive. A virtual machine is like running a second computer inside of your computer. So you can run an operating system inside of a virtual machine. You can run programs and applications inside of a virtual machine that will not affect, that only exist inside that box that you create on your computer. They can't affect anything else. So for example, let's say you've got a Windows machine and you spin up a virtual machine and you're running Windows on Windows, and you're running Windows in that virtual machine, and you connect to the internet and you get a virus. Well, that virus can only infect the virtual machine, in which you can just delete, and it's not affecting your larger computer. So Bitwarden does run inside Docker on a server, which Docker is just like a virtual machine, essentially. Yes. Okay, so good topics, good conversations. You guys are absolutely the best. We are going to break down, we're going to look at some big picture stuff here in a moment, talk about Ichimoku. First, I want to let you guys know that if you are wanting to improve your trading, if you're looking for an easy to read guide to improve some of the most common mistakes that I see traders make, I have released my brand new guide, my e-guide, the 5 mistakes holding you back from profitable trading. You guys can go download this. It is completely free. It is the first link in the description, 5mistakes.crackingcryptocurrency.com. Go download the book. These are the 5 mistakes that I see most traders make most commonly, and that, if corrected, can significantly make an impact on your trading performance and confidence. So let me know what you think. I'll be coming out with a lot more free material like this moving forward. Go check out your copy now. All right, let's go talk about the Ichimoku. So I want to show you guys, I was asked just earlier in our Discord, I believe the username was Bagholder. Am I an itchy? So the Ichimoku Cloud indicator was the first indicator that I used as a comprehensive mechanical strategy because it literally has all the components you need to trade it mechanically. We've got crosses, we've got divergence, we've got big picture trend, we've got short picture trend, we've got reversals, you've got everything that you could possibly need inside the Ichimoku. Now, I still use the Ichimoku to this day to help me identify and manage trends. And just to give you an idea of how effective it is, I'm going to show you how a simple Ichimoku strategy would have helped you out throughout this range. All right, so here we have price trading underneath the Ichimoku cloud. And finally, we get a very impressive break above a red Kumo cloud and a pullback to the Tenkan-san leading line. That is the blue line. What happens prior to this? Prior to even this breakout, we get our first initial hint where we see divergence because we see this Tenkan-san, Kijun-san cross. We see a TK cross. That occurs right here on December 22nd. We have that Tenkan-san TK cross. And then after that, price runs up to the Kumo cloud, gets rejected, consolidates. The Tenkan-san does not cross back below the Kijun-san. And then we break above, complete an edge-to-edge trade, break above the Kumo cloud. And at this point in time, basically all pullbacks are buying opportunities. We have a pullback to the Tenkan-san, profitable opportunity. A pullback to the Kumo cloud, profitable opportunity. And as you can see, we're going pretty volatile as this consolidation occurs. Pull back to the Tenkan-san, profitable opportunity. Pull back to the Kijun-san, opportunity. Pull back to the Ichimoku cloud, profitable opportunity. Pull back to the bottom of the cloud, but notice that we are not violating the cloud in any significant way. And then all of this is just kind of foreplay and lead up. Here we have a Kijun. We have a cross right here. So this is potentially letting you know, hey, we want to favor shorts. That ends up being invalidated on this movement. And here we have the Tenkan Kijun cross that is going to be really formative. This is right before the big breakout. So this is after the initial breakout. And then this is leading up to the big progress that we're going to see. So you can see that once this trend gets going, price pretty much stays above the Kijun and the Tenkan-san and does not pull back. The cloud is just advancing. This trend is very powerful. And when you start seeing these kind of movements, you're in trending mode. And basically you say, all right, as long as price is above the Kumo cloud and we are buying pullbacks to all of our major support levels here. That's the top of the Kumo cloud. That's the Tenkan-san. That's the Kijun. And where we're taking profit is when price, okay, multiple ways to take profit. Either grab yourself an exit indicator in the form of a momentum oscillator and look for oversold opportunities. Basically, whenever you see price spike very strongly away from the Tenkan-san Kijun line, you can offload and then reload once price pulls back to one of your support levels. You can look at volume. You can look again, like I said, at momentum oscillators or reference a higher time frame. But typically, the way, the kind of classic way that Ichimoku would tell you to do it, it's when your trend basically ends when the Chiku spawn, which is the lagging line, this yellow line right here. The trend, you want to kind of exit your trending trade when you enter into another period of consolidation. And that is when the Chiku-san catches, the Chiku spawn, catches up with price. So here, as you guys can see throughout this trend, this yellow line is not interacting with price. It's not touching current price action. And it never will touch current price action, but it's not catching up with price. And then here it does. And we see price, we can see the Chiku spawn begin consolidating and trading right along with price. And that is the indication of consolidation, of lack of trend. And we want to be using the Ichimoku as a trending indicator to help us time trades. So I just wanted to show that to you guys. I was going over this with a student the other day, and this is my first and easiest recommendation if traders are looking for a robust mechanical strategy to focus on. If they really want to focus on trading the way that I've been successful trading and building that mechanical strategy, focus on an if this then that logic set, trading like a robot, then this is the indicator. I also want to show you guys some pretty simple and quick napkin math, because oftentimes profitability as a trader is easy to kind of obfuscate and we make it really complicated. So if you are trading, so how much money can you make as a trader? Well, okay. I'm going to be making an assumption here, and I'm going to be assuming that you are going to be willing to be trading futures in cryptocurrency, which is where the majority of the volume is. And that is going to give you the ability to go long and go short. So there's going to be opportunities pretty much every day for you to trade. But we're going to keep things very conservative here. And we're going to say that you can amass a trading account balance of $10,000. Okay. More is better. That's fine. But let's start with $10,000. $10,000 at 10x leverage is going to give you $100,000 worth of funds to trade with. All right. You don't need that much. You really only need to use 2 to 3x leverage, $20,000 to $30,000 to implement what I'm about to show you. And you might even be able to get away with it using no leverage at all. But let's say you use 2% leverage. That is going to give you a 50% stop loss. And it's very hard to not make money. I mean, sorry, that's not the right way. It's not necessarily easier to make money if you have a 50% stop loss, but if you have a 50% stop loss and using 2x leverage, you basically shut out any of what can be negative side effects of using leverage, such as getting liquidated or having too tight of a stop loss and over leveraging. So, okay. So let's say you have a $10,000 account balance. That is going to allow you to take so again, at 2x leverage, $10,000 is going to allow you to take $20,000 position sizes, which is fine. But we need to make, let's say we want to make, let's say we do 2x leverage. So that's going to give us a $20,000 position size. So let's say we want to get a 2% movement off of $20,000. All right, we want price to move 2% in our desired direction. That's $400 profit if we can pull that off. All right. So we want to have at least half of that, or no more than half of that, be our stop loss if we're wrong. So $20,000 times 0.01. So that's a 1% stop loss. We're going to lose $200. All right. So if we take $20,000 position sizes, and that's a $10,000 account balance at 2x leverage on our positions. All right. So let's say we just focus on Bitcoin. Sorry. Let's say we trade a basket of 10 crypto assets, and on average, we get 3 trades a month. So you're trading 10 crypto assets, the top 10, let's say, except for stable coins. So we're trading 10 crypto assets, and let's say we're averaging 3 signals per month. Okay, that's 30 trades a month. And times 12, that's 360 trades a year. That's almost a trade a day. You won't be trading every day, but that averages out to be about a trade a day. All right. Now, let's say you do the work and you can develop a 65% profitable win rate strategy. All right. So 234 of those 360 trades are going to be profitable. And you're making $400 for every profitable trade. It's $93,600 per year. That is more than most of you make. Okay? Off $10,000. Now, that's not all. We have to subtract our losses. So remember, if we took 360 trades, 234 were winners. That means 126 were losers. And we lose $200 per time we lose. That's $25,200. That's $68,400. All right? Trading the daily time frame, trading for 30 minutes a day, Monday through Friday. All right, guys? Risk and return are not that complicated. So stop focusing on things you're not good at. Focus on developing a profitable strategy that gives you a 65% win rate, that gives you about 3 signals per month on 10 different assets. Andrew always tells new traders they can make $52,000 a month. Yeah, those are rookie numbers, man. At least $52,000 a month. I mean, at least $52,000 a month, dude. Jesus. Crypto Huddle says the itchy is good. A says it's good. Yeah, it's good, man. Andrew Munns uses the Kijun every day. Shout outs to No Nonsense Forex. I probably do mean Alex. I'd probably do mean Overbought, Alex. All right, guys. That's about all I've got for you today. We laughed, we cried, we talked. Where are we at? So, Bitcoin is currently ranging. Still holding weekly long positions, targeting an ultimate target of 24 to 25,000. I will be continuing to trade this range. So it's coming up to the point where I'm about, I think here's probably as good a place as any to take a long position. I'm still short. So I'll take a long just to stay inside of this range trading strategy. Once we get a big convincing breakdown candle, I'll add to my short position. I'll take any shorts that come up here near the top of the range, and I'll long any significant breakout candles. And once we get a breakout, I will shift out of range status, and I will go back into trending status, which I just showed you guys. You can pretty accurately and easily catch the meat of trends using just the Ichimoku indicator. Yeah, that's about all for now. I'll give you guys a more in-depth update on other opportunities, but and what we're kind of looking at elsewhere in the cryptocurrency markets. But those are the big things we need to be watching for today. Thank you guys so much for joining me for another exciting episode of the Breaking Bitcoin Market Update. Thank you guys for coming. Your questions, your comments have been amazing. I enjoy spending this time with you. I enjoy growing as a trader. So any help or advice I can offer you guys along the journey is just garnish on the dish. I really appreciate that. Thank you guys, as always, for all your support. If you have any questions, comments, concerns, sarcastic remarks, hot stock tips, or death threats, please leave them in the comment section afterwards and during the live chat. If you guys want to support my content, the like and subscribe button is right down there. And as always, if you'd like to work with myself and my team in 2023 to grow and build wealth in the cryptocurrency markets, there's lots of links down in the description, many ways for you to get involved, from our online educational material, our online trading courses, as well as our premium trading and investment group, in addition to all the premium indicators that we have, lots of different ways, including one-on-one mentoring. So get involved with our community, join our Discord. I will see you guys on the other side. We'll be back tomorrow. Same crypto time, same crypto network. Until then, trade safely, be kind to each other, make sure to tip your waitresses. I'll see you on the next one. Cheers.